Hello guys, welcome back. This is RandoGEEK. Alright, so we're going to talk about Verizon and T-Mobile and what we can expect from them in quarter two. So the article is from Light Reading. Mike Dono is the editorial director and author of this article. Link will be down for you guys in the description below. Verizon is scheduled to report its second quarter of 2023 results in roughly 2 weeks, and most analysts don't expect the company to reverse its customer losses, despite the fact that Verizon recently introduced new pricing plans and a refreshed management team. Statement made by TD Cowen. We expect postpaid phone losses of negative 153,000. In a recent note to investors, this was said. Verizon is scheduled to report its quarterly results on July 25th. So that's just around the corner. All right, it's less than 2 weeks. Verizon, the analyst argued that Verizon is in a relatively stable place. They said that they expect the company to continue to grow its wireless service revenues, and they don't expect much fallout from the price hikes Verizon enacted earlier this year. We still favor the stock in a recessionary environment, they noted of Verizon. Verizon and its rivals are facing increasing competition from each other and from the nation's cable companies, which are offering increasingly inexpensive wireless services. Just this week, cable confirmed Astound said it would expand its T-Mobile-powered mobile service into a number of new locations, including New York City. There are mounting indications that the outsized growth in the U.S. wireless industry is coming to an end. Indeed, T. Cowen estimated that the U.S. wireless industry collectively would gain around 1.92 million new postpaid phone net customer additions in the second quarter, a figure down 15% from the same quarter a year ago and down 3% from the first quarter. So this article says T-Mobile is on the rise. According to estimates from TD Cowen and other data sources, it appears T-Mobile is poised to continue leading the market in a customer growth. Despite the headwinds, we continue to favor T-Mobile as a top pick. The TD Cowen analyst wrote, specifically the analysts expect T-Mobile to report the addition of 733 new postpaid phone customers during the second quarter of 2023, which should lead the industry, they wrote. Other firms offered similar views. For example, KeyBank Capital Markets recently published a report on American spending trends based on data from roughly 1.8 million KeyBank credit card and debit card customers. The firm found that monthly spending on T-Mobile's products and services rose 53.7% year over year in June, up from 47.7% in May. AT&T meanwhile grew 25.6% year over year in June from 15.6% in May. The FWA equation. Finally, no discussion of the nation's big cell phone providers is complete without a mention of fixed wireless access. After all, 5G fixed wireless internet services, which run alongside 5G mobile services, have managed to capture virtually all of the growth in the U.S. broadband internet market in recent months. Some analysts predict that the trend will continue through next year. Some new data points reflect the situation that downloads for T-Mobile's fixed wireless app accelerated into June, wrote the financial analyst Evercore in a recent note to investors. The analyst noted that demand for the app is lower than during the holidays when T-Mobile offered an FWA promotion. Nonetheless, we expect 500,000 T-Mobile FWA net adds in Q2, assuming a similar decline in churn that the service saw in Q1. Interestingly, the financial analysts and New Street Research combed through the data that T-Mobile and Verizon submitted to the FCC about their FWA offerings. They found that T-Mobile claimed to offer FWA to fully 124 million locations. However, the operator said it offered 100 megabits speeds or greater to just 25.4 million of those locations. Similarly, Verizon said it offers FWA to around 30 million locations and that just 3 million receive speeds of 100 megabits or greater. Far fewer homes receive FWA speeds of 100 megabits than one might think, given the impact that the product has had on the broadband market, the analysts wrote. They continued this setups in two interesting possibilities. Either households need far less speed than we have been conditioned to believe, or many of the households that have adopted the product are going to discover that it doesn't meet their needs. We suspect both are true in part. All right, so there you have it. There's the article. Like I said, link will be down for you guys below if you want to read it or share it with someone else. But pretty much this is where we stand with T-Mobile and Verizon. I think it's pretty safe to say that we knew T-Mobile would come out the winner in the results, coming up. Also, I think it will continue at least throughout this year and maybe most of next year, because Verizon is going through some churn, customer churn, employee churn, and there's a lot going on with Verizon behind the curtains on the business side. Verizon is not the same company we knew a couple years ago. There's a lot going on. And until Verizon figures out a correct path and develops a solid plan, they will not be taken seriously by investors. There's going to be a sweet spot there where some investors will always have some faith in Verizon, and they should. I don't think this will last forever. I think Verizon will eventually get back into the game on the business side. The network building is good. Deployments have been growing rapidly. A lot of deployments. So like I said, a lot of credit gets due to Verizon for continuing to build out, doing what they said, making the network bigger and solid. But as a business, their structuring has fell off, and they need to regroup and reconsider, a better marketing strategy and a better overall business strategy if they want to continue to make profits and be reputable at this point. So T-Mobile is not perfect. There's a lot of things that they're doing that are just not great, but there's also a lot of things that they are doing great. They have a number of partnerships going on. They definitely seem a lot more focused on what their overall mission is. There are things going on behind the scene, but they're not as critical, I guess, and they're certainly not as exposed. So we don't necessarily know that they could be a good thing or that could be a bad thing, right? We don't know what troubles are hiding behind the curtains for T-Mobile, but we know the troubles that are hiding. Basically, we know the troubles that are out in plain sight for Verizon. Management is terrible, marketing is terrible. Their current description of plans is not good. Of things that they want to do to reduce costs are not good. So, I think Verizon definitely needs to dust themselves off a bit and reconstruct. They need to reconstruct the company, build it back up. Getting a new CEO might help. Getting a new CFO might help. As I've mentioned in a number of discussions regarding this scenario, two people should be doing two jobs, not one doing a job of two. That is penny pinching, and that will ultimately cost them more in the long run. Overstressing, overworking your employees is never a good idea, especially when those are high-level positions that require pure dedication and focus individually, okay? That's my opinion on that. So I think if Verizon can do that, they can start to be taken more serious by investors and appear more attractive to consumers that maybe are a little shaken by the business side of it and don't really want to sign up for plans. I also think, which I've expressed in a number of conversations, removing your United States customer service is going to be very bad for Verizon. Investors are immediately going to look the other way. Okay. The stock already plummeted when they reported that they were considering doing that. Once it happens, if it happens, it's going to be bad for Verizon, because it's one of the things that they have that they can offer, especially on postpaid plans. You don't want to take away one of the biggest perks that you can offer your postpaid customers that make them feel like they're getting premium service, besides a great network. Verizon has the great network, but customer service is part of a perk, part of the perk. You know, what are they going to do? Make it a chat? Well, then, like I said, what's really going to be different between Verizon postpaid and Visible prepaid? What will be the difference really at that point? Because they both work very well. And anyone that's done their testing knows there's barely any difference in service compared to Verizon postpaid. The differences are perks, benefits, customer service, you know, caller ID, little things like that that are on your account, you know, streaming services that are offered with Verizon, whatnot, that cost a lot of money. You know, it's not like it's free. You know, these are add-ons that cost money. But at least the service is there. At least those options are there. Visible doesn't offer any of that. So you can't bundle anything. There's nothing to bundle. So if you like that postpaid experience, that's why you go with Verizon. Otherwise, if you want prepaid, you just stay with Visible and pay half the price. Okay? So that's what I'm saying. What would really separate the two if they start doing things like removing United States customer service? You know, I don't think that's a good idea. So there's an overhaul that is needed with Verizon in order to maintain their reputation in being a stable, reliable postpaid service. So that's how I feel. Again, a lot of these carriers are going through major losses financially. A lot of poor decisions have been made. There's a lot of change that's probably needed with a lot of these employees that are within the company. You know, many have argued that CEO at Verizon, Hans, you know, it's been time to go for a while. Some are arguing at AT&T that Stanky may be time for him to go. Not sure how we feel about Seabird at T-Mobile. He's really just a ghetto replica of John, you know. But you know, it's an interesting show here that we're getting. You know, it's like one day they're doing something good and one day they're not. So behind the scenes, they're all struggling. T-Mobile tries to, you know, put on a show and act like they're not, but you know, it's a very competitive market, and that's why I keep saying too that it's also good to have choices. You know, a lot of it has to do with people are just tired of paying. You know, they're tired of paying and overpaying, and that's what I'm trying to say here is Verizon's going to be fooled. They're going to fool themselves to think that people are going to pay $90 a month for postpaid service when you get no benefits. When you don't have a customer service team in the United States that can help you, when you're transferred overseas and they can't help you, businesses are not going to take that. They don't want to deal with that. There's a lot of businesses that don't want to deal with that, and it's one of the reasons they probably chosen to use Verizon, you know, over some of the other competition. You know, a business can use Visible, get multiple plans. You know, basic Visible plan is $25 a month. Most businesses don't need millimeter wave. Okay? You don't need it. So you could save a ton of money if you were a business of 200 employees and you went to Visible on the basic plan. It's more than enough data to meet your needs, more than enough speed to power your work phone. Okay? So really, what keeps people going back to Verizon is that reliability, right? Which, you know, Visible is reliable. It's Verizon's network. Okay, you also get with Verizon, you get that postpaid experience, and that's why a lot of businesses choose to use Verizon. So if they're taking away all that, what's left? So this is why they're losing money. People are tired of overpaying. It's getting costly. Perks are being reduced. And quality is being reduced. Quality of the network itself is not bad, but the overall consumer experience is depleting. You're not getting what you were paying for a year ago. You know, pretty safe to say. So that's how I look at it. Comments are welcome down below if you guys agree or disagree. feel free to let me know. But I'm just trying to see it through the eyes of your everyday consumer and trying to get into the mind frame of what a business customer would want and see and feel, you know, and also trying to look at it as like an investor, right? Like these investors see it's disorganized. The company is disorganized as far as the business side is going. Like I said, the deployments are good. They're doing good deployments. They're able to manage that very well. Quality of network is good. Some shifting needs to be done within the organization. Some new people need to come in. There has to be a reevaluation of the company, the marketing, the whole structure. Get back on a plan. And, you know, I think Verizon will be all right if they do that. And it's the same thing that's, you know, has to happen with a lot of these companies, unfortunately. There's, you know, some of these people are just they don't care about the company. They're not contributing any real solutions to the company. They're just kind of sitting back and slowly letting themselves drown, hoping it'll get better, but they don't have any real plan of action. Not that it's an easy task, right? It's hard to convince consumers to pay for something that is overpriced, you know, that they just don't want. But, you know, they've been through this before. These companies it's not the first time that they've had financial issues. AT&T has been through a number of changes over the years. This is nothing new for them. Same thing for Verizon. They've had their issues. T-Mobile's had a ton of issues. Reevaluating the company positions is what needs to be done. That's it. All right, guys. I want to thank you guys for watching. It's much appreciated. Be sure to hit that like button on your way out. Consider subscribing if you're not already subscribed. And I'll catch you guys in the next one. Bye for now.